Hi guys, welcome back. It looks like we're in for a mildly positive start. Of course, the SGX Nifty has picked up pace over the last half an hour or so. Let's see which way it heads. Before we talk about the top 10 stocks of the day, the stock of yesterday undoubtedly was Prabhat Dairy. Didn't go down very well with investors on expected lines, Anuj. But what next? I mean, the chart just clearly shows that, you know, no one is appreciative of the decisions that the company takes. But what does an investor do here on?
Yes, and you know, the point I was making yesterday as well, that if you were chasing Prabhat Dairy yesterday and then got stuck, then perhaps you have to blame yourself. In any deal, Sonia, first thing that you should do is see what the stock has done over the last 1 year. I think that is the first basic thing you should do. This is just an example. Now, Prabhat Dairy, this is of course before yesterday's 15% fall. It's down 64%. Let's take out yesterday's move. It's still down somewhere around 55-56%. That should ring an alarm bell. First things that, okay, there's something wrong here. Let me be a bit careful. Then you should have asked yourself these questions. Why is there a slump sale? You know, if 98% business is being sold, why is it a slump sale? And I asked, the reason for that is you're selling it for 1,200 crores. It's a slump sale, so obviously there's a tax angle. Take away 30%, that's 350 crores. Now you're saying that, you will now return this money as dividend to shareholders, which would mean dividend distribution tax. So that takes away another 250 crores, right? That means 60 rupees per share on a price of 90 rupees per share. 60 rupees per share is something that you're going to go away as tax, right? In an equity market where there are much better ways of doing deals. So, you should think, why is that happening? Now, the counter question is the buyer saying that, look, I don't want the company, I want only the business because I don't want the future liability of the company? That should ring another alarm bell. Yeah. In that case, is there something wrong? So, I mean, not to cast any aspersion and not saying that what Prabhat Dairy is doing is anything illegal. It's perfectly legal. But as a shareholder or as an investor, you have to see your interest first. And in that case, when something like this, when a news like this comes, the first thing you...
It's not shareholder friendly, basically.
Exactly.
It could be corporate friendly, but it's not shareholder.
First thing you do is look at what the stock has done. And that was the point I made when, the news on Everready had also come. So far, we are still to see the deal, right? You see what the stock has done. I think that will give you an answer, whether you want to chase a 20% up move or not. It was a clear no-no, and you should have just completely avoided it. By the way, we tried to reach the management of Prabhat Dairy through the day yesterday. Even in closing bell, I think we had made several calls. They didn't get answered. Let's see if they're willing to come on air and clarify on these issues. For all you know, they might come out and declare dividend, which may lead to the stock rallying once again. But that's a bit of a risk right now, honestly.
I completely take your point, Anuj, because when you buy into a business, wanting to be in that business, you want to be in the dairy business, that's why you invest in that company. Suddenly it turns around overnight, becomes a cattle feed company. I mean, I don't know. Definitely something that didn't make the market very, very comfortable yesterday, and the evidence was on the screen. But beyond this one, Anuj, other stocks on your radar today?
Yeah, a bit boring today. I think two stocks which have been the market leaders. Infosys, yesterday's last hour move is showing that the uptrend is intact. Perhaps it may not work today, but it just shows you that it pays to buy leadership stocks on decline. It's set to make a fresh 52-week high. I think Kotak Mahindra Bank, really, it's been a dream run. 3 or 4 days back, we spotted the breakout at the 50-day moving average. And after that, yesterday, there was a delivery-based buying of 400 crores. I think the street is betting on, finally some kind of resolution here. And, the stock, of course, in its highs was 1,400 thereabout. I'm not saying it goes there, but it's been a one-way move from 1,200 to 1,290. Again, a stock that, perhaps you want to buy on all declines, not chase the momentum, but next time it gives you a decline, perhaps you want to say, look at that move from 1,200. It's just been one way.
Oh, absolutely. It has assumed the leadership mantle in the market. But the other stock that perhaps could see some follow-on buying is Asian Paints. The highest volume growth in at least the last 8 years is what Asian Paints reported. Mangalam is here to tell us what the management said at the conference call. Mangalam, positive statements there?
Positive statements, Sonia, but the company makes paints for all seasons, so all sorts of shades were seen in the conference call as well. Starting with the sunny bits, all regions, all categories have done well this quarter, so that arrests fears of market share loss. The slightly cloudy bit, medium-term outlook is slightly uncertain because of a busy election season. And then the silver lining in the clouds. Mysuru plant ramp-up is stabilizing. BAZAAR plant will come on stream in this quarter. So new capacities should aid volumes going forward. And they saw some respite towards the end of the quarter from lower crude prices and slightly appreciating currency. So this should follow through in the fourth quarter itself. Brokerages are by and large positive. Jefferies, for instance, they've increased their EPS estimates by about 6%. They maintain their buy rating with a target price upwards of 1,600 rupees. And Edelweiss has not only increased their estimates, they've also increased their multiple from 45 times to 50 times, and that results in a higher target price. Expect to see some green on Asian Paints today.
Okay, in fact, on that note, let's also hear out what the management had to say in that conference call.
The two new paint manufacturing facilities being set up at Mysuru in Karnataka and Vizag in Andhra Pradesh in South India. The first phase of both those plants will be commissioned in the next financial year. The forex situation in the markets of Egypt and Ethiopia continue to be a key cause of concern. When you compare 2 years, there are the impact of Diwali, monsoons and other factors. This year the Diwali was much earlier than last year. So there is the Q2 and Q3 of both the years are not strictly comparable from the demand context. So while we have seen an uptake in demand after the impact of GST, we still maintain that demand is not as good as we would like it to be. It has not reached the levels of the pre-GST period in our opinion.
Okay, that's Asian Paints. Now, yesterday between 3 to 3:30, you saw that move on both Mindtree and Copy Day, and it looked like perhaps that a deal is in final stages. At least the market is indicating that. Let's just pull out the stocks, intraday chart of both Mindtree and Copy Day Enterprises, especially the last hour move. I think that was telling. So those are the two stocks that will be on your radar, of course.
So can we Anuj, say what's brewing here? I'm sorry, sounding that's a cliche joke, but anyway.
Let's go close to Rima. Actually, she has more details, but I'm just trying to put on board that yesterday the market move clearly was indicating something like that. Rima.
Yes, absolutely. It appears that the momentum for a stake sale in Mindtree seems to be gaining because, and this is, of course, we're talking about VG Siddhartha's 20% stake in Mindtree, which is reportedly on the block. Yesterday, there was a report in Live Mint which indicated that Larsen & Toubro is interested in picking up VG Siddhartha's stake with the intention of finally merging it with L&T Infotech as well as L&T Technology and then Mindtree. Today, there is an article in another pink paper which suggests that Fairfax is edging out competition to be in the lane to acquire Mindtree's stake. So it looks like, the stake sale plan is hotting up. Remember, VG Siddhartha only has about a 20% stake. Now, if an investor wants to have a board seat, then he has to hit the 25% mark, which means he needs the buy-in from the promoters or some other investor to get to the 25% stake and get that board seat, which will eventually lead to an open offer. But right, as you rightly pointed out, given the way the stock is moving and what reports are suggesting, it appears that companies are doing the due diligence and the deal could be in offing. But this is, of course, only what we're picking up from reports. We haven't officially got an official comment.
All right, Rima, thanks a lot for that. So the million-dollar question, who will be acquiring VG Siddhartha's stake in Mindtree? But let's move on. Syngene is one stock that has done nothing in the last 12 months. It's been very range-bound, but the numbers are looking good. Ekta's here to tell us more. Hi, Ekta, morning.
Hi, morning, Sonia. Well, yes, for Syngene, which is basically the CRAMS or the services arm of Biocon, in fact, did quite a good quarter, reported quite a good Q3. So the revenue was up around 20.5% versus estimates of around a 25% growth. EBITDA was up around 11% this quarter, with margins maintained at around 30% versus around 32.5%, and sequentially also 30% last quarter. And the profit was up around 6% to 87 odd crores, and that was impacted by a higher tax outflow as well as a higher finance cost. But overall, good quarter coming in from Syngene, and they've managed to maintain this double-digit, high growth since the past couple of quarters.
Okay, all right, Ekta, thanks very much. We will keep Syngene on our radar as well. And also State Bank of India. Interesting developments yesterday. State Bank of India has sold a tranche of its SME loans. In fact, the total value of the loans that have been sold out is around 3,200 crores. It's a total of 197 accounts. pretty interesting. Selling out loans is nothing new, but the fact that they're doing it within the SME and MSME portfolio, perhaps we need to sort of keep a tab, because this is the watch point on whether there is more stress building up. So that for the stock, of course, would be a positive, because that's loans sold and money coming in. So SBI on the radar as well.
Okay, well, let's do one thing. Let's get a quick review on what's happening with HDFC Standard Life and ICICI Pru. Abhishek is here. Abhishek, how did the numbers look?
Well, Sonia, the high valuations in the life insurance sector now looks to be a part of history. So if you look at HDFC Life, the premium is up 27% YOY, but it's down close to 2% quarter on quarter. There is a beat in new business premium. However, the value of new business margin, which is a key metric, is down 50 basis points on a sequential basis. The persistency ratio on the 61st month has also fallen, and CLSA maintains their buy recommendation but have cut their earnings estimate and also lowered their target price to about 475 from 510. MK has also, downgraded their target price to about 450 from 465. For ICICI Pru, the premium is up only 10.5% YOY and down about 1.5% quarter on quarter. The income is largely driven by the group insurance business and not the outside business. So value of new business margin, again a key metric, is down 50 basis point quarter on quarter. The 13-month persistency ratio has also declined sequentially. CLSA maintains the buy recommendation. However, for second quarter in a row, they have cut the target estimate. Back to you.
All right, Abhishek, thanks a lot for that. Here's Anisha with some other stocks in news.
Well, yes, Anuj, I'll start with some order wins, because BAZAAR has won an order for desalination plant from the Mangalore refinery for 467 crores. And Walchand Industries has also backed an order for around 100 crores, and this one is from ISRO. Moving on to ILNFS, wherein the balance sheet woes really continue, and the company said to the exchanges that they were not able to pay the interest due on the debentures. So continue to see a pressure as far as that is concerned. Reliance Industries as well as Den and Hathway will be in focus, because the CCI has gone ahead and given the green tick for the acquisition that was proposed. Moving on to Cyient, because they are looking to buy balance 26% stake in another arm. So it looks like an intercompany transfer, but this is for around 43 crores and the company might see a green tick today. Britannia, keep that on your radar today, because reports are suggesting that that could be one of the key candidates to move into the Nifty index in the month of February. So definitely keep that on your radar, and keep an eye out on Oberoi Realty. Now the numbers are a tad bit mixed there. While the net profit growth as well as the revenue growth is strong at around 15% and 50% respectively, it is the margins that have disappointed, and in fact on a year-on-year basis it is quite a bit of a depletion that we have seen, because the margins came in at 35% versus 54% last year. So keep that on your radar as well. Back to you guys.
Okay, thanks a lot for that. Yes, Britannia reports suggesting it could move into the Nifty. The last 3 months have been very strong for that stock, gone from 2,600 all the way to 3,100. We'll track all of these stocks in great detail, but in case you missed out on any of them, here's a quick recap of our top stocks to watch. Stocks with positive news flow this morning. You have Infi, Kotak Mahindra Bank, Asian Paints, Mindtree, Syngene, SBI, VATech, Vabag, Walchand Nagar, Reliance Industries, Cyient, Britannia and Oberoi Realty. While stocks with negative news flow this morning, HDFC Life, ICICI Pru post numbers, ITNL, ILNFS Investment Managers and ILNFS Engineering. All right, well, let's move on. Today's a big day in terms of earnings as well. ITC will be in focus. So let's find out from Mangalam how the numbers might look. A good Q3 this time around, Mangalam?
Good quarter is expected, Sonia, for a couple of reasons. The first one is the fact that they're working on a favorable base. And secondly, over the last 18 months, this tax regime in tobacco has been pretty stable. Add to that, ITC trades at 25 times FY20 earnings, which is a 51% discount to HUL. So this discount has been the widest in a very long time. So it has that sort of support as well. The numbers that we're looking out for, 10% growth on the top line, 10,740 crores is what our polls suggest in terms of ITC's revenue. EBITDA likely to grow by about 10.5%, 4,300 crore thereabouts, with a 40% EBITDA margin is what the street expects the company to post this time around. The net profit, however, likely to be flat at 3,077 crores. Why is it flat despite a 10% growth on the top line and EBITDA? Is because the base quarter had a 413 crore worth exceptional gain. So if you adjust for that, the net profit growth is actually 15%. A key to remember that is just remember the absolute number, 3,100 crores thereabouts on the bottom line. Cigarette volume growth, that is the most important for ITC. Watch out for their FMCG cigarettes business. If it shows a revenue growth of around 10%, can assume that the volume growth is around 6 to 7%, and that is something that the street is expecting. Why is that? Like I said, a low base of 4% decline in the base quarter and no change in cigarette taxes over the last 18 months is something that will go for ITC. The other businesses, FMCG others, 11 to 12% growth in their revenues is expected. More important to watch out for how the operational performance out there comes by, and hotels business as well. Everyone is talking about structural changes in the hotel industry. These are the things that we'll be watching out for.
Thanks a lot for that, Mangalam. Well, moving on to some larger themes, the partial shutdown of the US government has not impacted Infosys American business so far. That's the word coming in from Salil Parekh, the CEO and MD of Infi. However, in an exclusive interaction with CNBC, Parekh added that if the stalemate is left unaddressed for too long, it could have some downstream impact on Infosys. Listen in.
We've actually not seen any impact on our business. About 60% of our business comes from the US. And we've had good growth. We announced our results just a few days ago for the last quarter. A strong growth in the US, strong growth in financial services across all of the sectors. Of course, the work that's going on within the US and the concern with the slowdown, with the shutdown, will result in some impact downstream if it's not addressed at one stage. We've not seen any dip in demand. Of course, this has been a long growth cycle. With the shutdown and with some other activities globally, there's some concern that this could start to slow down. There's talk about it, but in real demand terms, there's no real impact. Our European business actually grew faster than our US business in the last quarter, and that's going well. Asia Pacific for us, mainly Australia and Japan, that also grew nicely. So all of those at this stage seem to be okay. You know, digital investments, we still see massive growth. We had 30% growth in digital. And so that's not something that's going to quickly disappear to zero in the coming years.
Okay, so those are voices from Davos, and you will be hearing a lot more during the course of the day as well. Quick break right now. We will come back and look at the opening, also get you an outlook on the technicals and trading ideas for the day.